Best.Podcast.Ever is sponsored by the Gertzberg Law Firm, a full-service, award-winning business law firm in Cleveland and Chagrin Falls that appreciates what matters most to businesses: practical advice and cost-effective results. We understand your business because our team has the unique perspective of having real-world business experience themselves. Learn more at gertzberglaw.com. While you're there, be sure to check out Cover My Six, a proprietary legal audit that will identify, target, and minimize your business's exposure to lawsuits and government investigations. Go to covermysix.com to learn how you can prevent a lawsuit before it starts. Enjoy the show.
Ladies and gentlemen, you're about to listen to the best podcast ever recorded.
If you made a trade and it's going against you, you don't believe in it, just get out, turn the page, rip the Band-Aid off, take the loss and move on. Because what happens is that it gets worse and worse and worse. And when you don't punt, you forget that the whole world's going on around you. There's other trades, there's other things that you can be focused on. So get out of it and just move on.
Hey folks, Alex Gertzberg here. Best podcast ever. Thanks for tuning in. This episode is a fun one. I interview TJ Gliha. He is the Vice President, Private Client Services at Sequoia Financial Group. I call TJ the real-life Wolf of Wall Street, even though he would deny it. And even though I highly doubt he participated in any of the debauchery that the real Wolf of Wall Street did. He doesn't go into it, but I suspect that in his options trading days at the Chicago Board of Trade, I mean, maybe not on the floor of the Board of Trade, but like there were, it sounds like there were folks that were having a good time. TJ, of course, is the epitome of seriousness. I'm being partly facetious. We had a good time. He's a fun dude, and there's a lot of joking around here, including at the very end. He's got a great story when I ask him the final lightning round question of what's an embarrassing thing about yourself that nobody knows. I'm not gonna. That's all the teaser you're gonna get about it. All I'm gonna say is you're gonna want to listen to the answer to that question. So TJ and I actually have only recently gotten to know each other. I just in the last 2 months applied for and was accepted into this incredible organization called EO, which stands for Entrepreneurs Organization. I'd heard about it for a long time from people that I really respect, and I fought the urge to join it because I thought it was going to cost a lot of money, and I ended up sucking it up and joining it and applying for it, and I'm really, really glad I did. And TJ is involved in it as Sequoia is a sponsor there. But after I met him for lunch one day and just listened to his story and just had a really great conversation, I invited him to come onto this podcast and let me interview him, and he did, and I'm glad he did because it was a really fun interview. So we talk about succession planning, we talk about risk, and a lot of other things that I think you will enjoy. So thank you for tuning in, and enjoy this episode. TJ Gliha, how are you?
I'm well.
Good.
Thanks for having me here today.
You're welcome. Did I pronounce your last name right?
You did, Gliha.
You and I got together for lunch at Delmonico maybe like a month ago, and that was the first time we'd ever met. We were introduced to each other by a mutual friend, and by the time we were done, I said, "You absolutely have to come on my podcast and tell some of these stories." I've been thinking of you in my head as like the Wolf of Wall Street, but without all the drugs and all of the hookers and all of the crazy shit that they did in that movie. Although that is an assumption I'm making. There may well have been all of those elements in your life, but certainly nothing that you've disclosed to me.
Sure.
And you're welcome to talk about any of those things to our many listeners, but I'm guessing FINRA might be listening, so I don't know if you want to, but you've got such an interesting story, and a lot of the parts that were memorable to me about it all took place in Chicago. Which we're going to get to, but start before Chicago and walk us through, whether it's the mundane or the interesting parts of your life that got you to Chicago, running your business there, your accounts, your money there. Was it the Chicago Board of Trade? Is that what it was?
So I started. I worked for a proprietary trading company in which we had. I started the Board of Trade, trading 10-year note options, and then moved to the Chicago Merc. But then Chicago Merc bought the Chicago Board of Trade, and then we all moved back into the Chicago Board of Trade building. Okay,
so go before that. Start with college and get to that. And I'm going to be interrupting you a lot because I usually need any securities or investment concepts explained to me like I'm a 4-year-old.
Mm-hmm.
And so I'm probably going to be asking you to dumb it down for me as we go. So don't be offended when I look confused and panicked and stop you. But all right, walk us through from you grew up. Did you grow up here in Cleveland?
I did. I grew up on the east side of Cleveland.
Okay.
Grew up in Chesterland, Ohio. Grew up in a middle class family, mom, dad. I have a twin sister, 2 younger brothers. Graduated Notre Dame, went to University of Dayton, and when I went to college, I wanted to be an attorney. So I come from a long line of attorneys on my mom's side of the family. I have several uncles that are estate planning attorneys. One was a defense attorney, and now he's actually a judge here in Cuyahoga County. So,
okay, same last name.
No, he is my mom, McGinty.
Okay. McGinty.
Mm-hmm.
All right. Well, everyone knows McGinty. You were wisely talked out of the practice of law by someone. How did you veer away from that career path?
So I like to chat. So I was a lifeguard at the time at the Shoreby Club. And
love Shoreby.
Yeah, it's beautiful. And so I lifeguarded and I waited tables, and a lot of people weren't actually swimming in the pool. So on days there was a couple, and this was right at the peak of the .com bubble. They were always reading investment periodicals, books. There's charts on their chair. So I would just go next to them and start spinning some yarn, ask them questions, and we formed a nice friendship, and through that process, I got really interested in investments. And at the time, my cousin who lived in Manhattan was dating a woman who worked for Goldman Sachs, and they came in town for that summer and came in town for a family party. And I remember just chatting my cousin's girlfriend's ear off, asking her a million questions. And she said, well, why don't you come out this fall? And, I can bring you around the floor. I can, introduce you to some people. I know a bunch of people in and around, not only at Goldman, but at Morgan and Credit Suisse and a couple other investment banks on Wall Street. I said, that'd be awesome. So I remember putting together a makeshift resume, and essentially she said, I'm happy to bring you around, but there's no chance that you're ever going to get a job there. We go and recruit at the top Ivy League schools in the country, but we'll do whatever we can to help you. So that fall, I remember going out there and interviewing and meeting with a bunch of different investment banks. And at the time, I'm like, I have nothing to lose here. I mean, there's no chance I'm getting a job. But it was really cool experience when you're sitting with 4 or 5 people peppering you with math questions and problem-solving questions, and basically just trying to intimidate the hell out of you. So,
were you naturally good at math at this point in your life?
I wouldn't say I'm good, I would say I'm average at it. Like what I was. I was like flashcard math, right? Like nothing. Like I'm not going to be like Will Hunting and put equations on the wall or anything.
Well, the perception, the assumption that I always have is that people in the investment world have to be exceptional at math, which is why I never went into it. Right?
Sure.
To me, it's anything more than like 3 numbers being added or subtracted or multiplied together, and I'm done. Mm-hmm. Right? But you guys, the assumption I have is that you guys have to be really good at it.
Yeah, I mean, you have to be. I wouldn't say when I moved to the trading side later on in the pit trading world, you have to be really good at flashcard math, and more importantly, you have to be good at. You have to have confidence in what you're saying that math equals, right?
How did you get good at flashcard math?
Just practicing over and over and over and over again. So,
are you really good at poker?
I'm all right. I mean, I would say there's guys that are exceptional at it. The game of poker, just like trading in general, is patience.
Yeah,
right?
Which we'll get to that.
Yeah,
but when you play poker, do you calculate poker odds when you play in your head?
I used to. Now I haven't played since like 2007 or 2006. So now if I ever do play, I played one time a couple months ago, and I kind of remembered, but it was more just for fun.
Right. Okay. So you go to did you say it was Morgan Stanley?
So I went to Goldman, to Morgan, and Credit Suisse, a few other banks. And I remember driving back being like, there's no way in hell I'm getting this job, right? So whatever, I had a great time. We went out. It was a lot of fun. And I got a call from Credit Suisse and got the opportunity to go out there and spend the summer there. And I remember in college thinking, oh, I'm on top of that. This is incredible. Like, no one's ever done this. And I'm a kid from Chesterton, Ohio, going to Manhattan, and we didn't have a building that you could jump off of and hurt yourself in Chesterton, let alone going to New York. Right. So it was an unbelievable experience. It was the best summer of my life. And I remember I at the time was one of the only non-Ivy League guys there. So you automatically have a chip on your shoulder, right? So you go there, you try to outwork the guy next to you, and but what I loved about it was so different than anything I'd ever been exposed to. It was merit based, right? You whether you were a rocket scientist or a dude who could barely comb his hair, if you understood and could make money and trade and had good confidence in your abilities, you could be successful.
So what are you doing at Credit Suisse in your this is after your third year of college?
Yeah, so you're an intern. So essentially you're fetching coffee, but they're teaching you. At the time, it was biotech, and I mean, tech bubble was 2000 and the summer of 2001. So it was just at the tail end of the .com bubble, and I got to see there's a listed block trade, the international trading, derivatives, and as well as biotech. And before this, I mean, again, I was hoping I'd be an estate planning attorney. So this opened up the whole world of something completely different to me, and it was fun. I really, really enjoyed it, and you got to learn. It was a completely different view of life, though. I mean, like when I say, have you ever seen the movie Boiler Room?
I have. I love it.
So there
was it like that?
I mean, I went out and did things that I mean, like it was a huge exposure that I'd never seen before in my life. I mean, I went out every single night, and I could see why people in New York were always saying, hey, you want to go grab a drink or you want to do this. Is first of all, you live in a 500 square foot apartment, right? And there's no room. And then,
but which in Manhattan, right?
Yeah.
So it costs like $1 million.
See, I lucked out into the best situation. So my cousin at the time had a beautiful apartment in Midtown, 34th in between First and Second. He had his longtime friend as his roommate, and then his longtime friend's sister and her best friend as the roommate. So there's 4 of them living there. Well, my cousin spent the majority of his time at his girlfriend's house, so I had basically my own room, and I didn't have to pay rent. They were so nice and so gracious to me.
Yeah, that's a pretty sweet deal. People, I know what my cousins live over there, and I know what they pay per square foot, and it's more than the mortgage on my house.
But I have nothing.
It's a tiny little.
I mean, that summer I got paid, and you got paid pretty well. I forgot you get an equivalent of like $60,000 in a salary for that couple months that you're there. So literally, I spent nothing. My money on nothing but booze and going out. Like I didn't spend it on anything else. But I look back and I'm like, I'm 21 years old. That's what you should be doing.
Yeah. Dangerous. That's a dangerous situation. So you're okay. So you go back. I take it. Right. You're hooked now.
Yep.
You graduate college, and then you go back to New York.
So what happened in the fall of 2001 changed the trajectory of my life forever. Right. So fall of 2001, going back to school, had a job. Job was reneged after September 11th. All Wall Street banks were on a hiring freeze, right? They had, I think they accepted, originally we're going to hire 30, accepted 2, right? So my job, I didn't have a job. September 11th changed everything. And moving to that fall, ironically around the same time I met a girl, as usually the story begins, right? So met who is now my wife. But you're right; it changed the trajectory in the business world. So I immediately started bulking up on finance classes. Met with the people. Hey, I want to graduate with some sort of business, some sort of business degree. Can I and still get out in 4 years? So we're able to make it work. I think I have like a management or some sort of degree around that.
Are you back in Dayton?
Yes.
Okay.
Yep. So I graduate college. Move out to Chicago. I remember I was out at Dayton and Daytona. So every year in Dayton, you'd go spend a week after the school year ended out and you go down to Florida. The whole school would go down there. So it was a big party. It was fun. On our way back, my roommate at the time got a call from his friend saying, hey man, my aunt owns this building in Chicago. I need a roommate. Do you want to live with me in Chicago? And my roommate said, I just accepted a job in Baltimore. I'm out. So he's about to hang up the phone. I picked up the phone. And I said, I'm in. And I said, I know you and I have never really met each other, but I'm in. I'll move to Chicago. So literally packed up my bag after I graduated, lived at home for a week or two, packed up my bag, and I think I left with $680 in my pocket. And I remember somewhere around there because my first rent paycheck was $487.50. So I wrote the first month's check, and then I went and waited tables. I got a job working at a restaurant and waited tables while I was interviewing for different positions. So, and that's, I think everybody in the world should go and have to wait tables because it really is the hardest job on the planet. So I worked on Navy Pier, and at the time, my one buddy, his brother-in-law started a brokerage firm in the Chicago Mercantile Exchange. And, so he introduced us, we met, and I was hired on the spot as a runner. And in that particular job, if you picture a stadium seating,
okay,
all the institutional clients are on the outside of the stadium seating, and then you have this octagon pit that have some steps to it. All the people on the outside of the pit work for the brokerage companies. And then you have the brokers that line the top of the pit, and then inside the pit, you have the local traders, the proprietary traders. So the local and the proprietary traders represent nobody except themselves. They don't have clients. They're the ones
using their own money.
Correct. They take the other side of the trades. And then you have the institutional traders, the guys that work for Goldman or a pension fund or hedge funds or whatever. They're in the stadium seats. And in between, you have the brokerage companies. So I ended up getting a job for the brokerage company. And I remember getting a job, it was $300 a week pre-tax. So literally, I mean, you got paid nothing. But you work like a dog. Well, at the time, one of the lead sales guys that worked for the brokerage company, the lead clerks, what they call them, but he facilitated the largest clients of the brokerage company. His brother was very ill, and he had to go and donate a kidney to his brother. And at that time, they're like, well, we don't really have anybody else that can fill his shoes. So TJ, put this headset on and watch this desk. Don't worry about it. We'll help you out. They're not really going to put in orders from you. If they do, we'll help you out. So literally the first day I put the headset on, the guy, the client waves me down, and he quotes a strategy that I had to use the broker. I asked the broker, for example, I'd say, DC 85.6 7 put flyer. And I turn around, I ask the broker, he gives me the quote, I show him 1/2, 1/2, 1/2 meaning the locals are willing to buy it for 1/2 and they're willing to sell that put fly for 2.
And you're using finger gestures right now. So you're like the baseball manager talking to the pitcher, right? It's all signals,
exactly.
All hand signals.
So what you see in Ferris Bueller, or in trading places, like that's real.
Yeah.
And it's crazy is that it's called ARB, like arbing and
arbitrage.
Okay. Right. So it looks incredibly chaotic, but it's really efficient. Yeah. So I'm, giving him the signal 1/2, 1/2. He's asked me for the size, meaning how big's that offer. And I remember, showing him a large size offer, and he ended up buying, just saying, pay 2 on 10,000. 2 on 10,000's filled.
So this is you on the floor as a broker,
as a clerk for a broker,
mm-hmm. And you're doing hand signals with these institutional clients.
Correct.
And these guys are like insurance companies, right? Banks. They're these giant companies that are, I mean, how much money are it per trade?
Millions
of dollars, right? So they're giving you these hand signals on what to buy or sell. You're then conveying, you're processing their order, passing it on to whom?
So the broker is standing directly behind me.
Okay.
And the broker is the one that's going to represent that client's bid or offer to the pit. So the pit being the local traders or other institutional firms that are looking to fill orders. So the product that we traded in was called the Eurodollar option. And the Eurodollar is U.S. money. It's that interest rate, overnight interest rate that they charge foreign banks and easier way to explain this. Just picture this way, LIBOR, where the 3-month LIBOR is going to be 3 months from now, 6 months from now, 9 months from now, all the way till 10 years out on the curve. So they use this product as short-term interest rate exposure. So publicly traded REITs or people that have short-term interest rate exposure and need a way to hedge that risk, they use the Eurodollar option pit to help mitigate that risk.
So you just referred to it as a product, right? And so the product is like a bet, right? It's a hedge, right? And that product has a price that the market establishes, right? And so the product is the hedge.
Well, the product, I mean, so you're trading options on interest rate futures. So really the product it's a derivative of the interest rate future, where that interest rate's going to be 3 months from now, 6 months from now. So where that overnight lending rate is going to be 3 months from now, 6 months from now, 9 months from now. So we see, I'll just fast forward in the subprime crisis, in a Great Recession, 07, 08, 09, that short-term interest rate went from being called 4 or 5%, went down to 0. And then in the middle of the crisis spiked again because people were afraid that banks they couldn't lend you money overnight because they're afraid you wouldn't be there tomorrow.
Right.
So that overnight interest rate spiked. This product, this Eurodollar option, helped large institutions and large hedge funds and pensions to hedge and mitigate their risk in that short-term interest rate exposure.
Got it. So what period of time are we talking about right now?
So back up. So right now, so this guy, we filled this huge order for the institutional firm. And after the day, we're clearing the trades and I'm talking to the broker and the broker says, do you have any idea what you did today? And I said, no, I think I've been there 4 months.
Yeah.
And I said, I have no idea. And he's like, you just filled the largest order we've had in years. And I'm like, that's fantastic. And he's like, yeah, I mean, can you believe that? And I said, I don't know. I think I want to quit. And he's like, wait, didn't you hear what I just said? You filled the largest order. And I said, well, that's great. And I remember I said it more eloquently but I said, I want that guy's job pointing at the client, or I want that guy's job pointing at the trader in the pit. I
don't want to be the runner. I don't want to be the clerk.
I don't want to be this job. A monkey could do this job. Like I didn't do anything, and I didn't learn a tangible skill. So he knew that was going to be an issue, and so he had the foresight to introduce me to a proprietary trading company that he thought would be a great fit, and I interviewed for that firm, and at the same time, Goldman in Boston was getting hot and heavy again, and so I had to make a decision to my wife or my girlfriend at the time, and asked her. I said, if I were to take a job in Boston, would you follow me? And would you come with me? And she's basically like, no. I mean, yes, maybe, but the answer was really no. And so I decided to take the proprietary trading job, and it was the best decision I ever made in my life. So,
so you stay in Chicago.
Yep.
What year was
so this? This is 02.
Okay, got it. So still pretty. I mean, so the .com bubble had burst, right? Still within that sort of recession that happens after 9/11, right? How does that play in your psychology at that time?
So I think at that time I was just a sponge, right? Like and to be honest with you, when I moved to the trading side, you're a trade checker and you're a clerk and you're just trying to learn. So I remember the bottom line is I spent 6 months in the Eurodollar option pit. I spent 6 months in clerking in the Chicago Board of Options on the equity S&P options pit. And then I spent 6 months or a little less than 6 months in the 10-year Treasury options pit. So I got exposure to 3 different products, all trading options, with different underlying contracts. So it was awesome. Like, I mean, I got to learn so much from, at the time there probably was 15 people at this firm.
This is the proprietary trading firm.
Correct.
What is a proprietary trading firm?
So proprietary trading firm is that there's no clients. We trade
your own money.
Essentially our own money. At this point, at this firm, we had backers. So you had financial backers. So call them the bank. And they would put up the margin required in order to trade in these particular pits. In exchange, they get a cut of the profits at the end of the year.
This is the part of trading that strikes me as being identical to a casino.
Oh,
Right?
I mean, it can be. I mean,
I mean, you're playing with loan money, basically, right? You're playing with like some lender's money, hoping that there isn't a margin call, right? And so long as you're winning, you get to keep what you won and pay your margin guy, right? Your margin lender some interest, right? Is that how it works?
I mean, they got a cut of the profits.
Right.
Yeah.
It just sounds like gambling to me.
I mean, it really is. And so, like, if you think about it, we provided liquidity to the marketplace, right?
Yeah.
Like that was you make yourself feel about it
that's
better.
That's a legit way of describing gambling.
We really didn't provide a service to mankind. Like I wasn't representing a client; we were representing each other. Essentially, we just shared a big piggy bank, and we traded, and you took risk, and some days you won, some days you lost. But hopefully you make day trades. There's day trading, right? You day trade in and out of positions and things, and then you have your overall larger position. So the position that you have is what you carry on an overnight basis. Some people carry nothing; they carry no risk. Other people carry an exorbitant amount of risk, right? So you had most of the time you day traded to cover your position. And because there's going to be days like poker where you're paying the blind, but you know that eventually it's going to pay off.
Yeah.
You just have to have patience. So
at this time you are still an employee for this proprietary trading company. You're not playing with your own money yet.
Correct.
Right?
Yeah.
Okay. So how long are you doing that?
Well, actually, so the whole time I'm essentially they're the backer. So let's call them a bank. So we as a group are entrepreneurs. So you run your own business. So essentially, if I wanted to hire 3 overnight guys, and overnight meaning to trade the China or Asian hours, and then I wanted to hire a London guy, you could. You just have to bear the brunt of that on your P&L. At the end of the year, you square up and say they'll provide the margin to cover your trades in account, and every you cover expenses all come out of the account. You cover salaries, et cetera, et cetera. At the end of the day, whatever's left over, you split between you and your team. So,
right. But so at what point is it your?
It's never.
When are you a partner in the?
So I was never a partner in the firm, but we're a partner in the sense that you get paid essentially once a year. So if you and I are going to the trading pit and we're partners in the pit, and you and I trade and we don't make any money throughout the year, you don't get paid at all. There's no money, right? So, but if you and I trade together and we have a $3 million P&L, and after expenses, you pay the backers $1 million, and then you and I keep $1 million.
Well, it's kind of like partners, right? I mean,
you
just described a partnership,
yeah,
right?
That's exactly what it is. But there wasn't like my name is owner on the door.
Got it. What was throw out some numbers? What kind of bets are you laying down during this time?
Well, I mean, I can give you the most money I lost in the shortest period of time is we lost $1 million in 19 seconds. I mean, I remember right before the Fed cut the discount rate for the first time, my partners and I, we were literally high-fiving each other, skipping down to the pit because we were so long. Volatility spiked, right? Everyone thought the world was coming to an end. They didn't know what the hell was going on. Volatility was good for the proprietary trading world, right? So volatility, you take the other side. So we were long options and we were long volatility. All week was a very profitable week, but as soon as the Fed cut the discount rates, it reduced volatility. So our position, all the options that we were long heading into the day, went to poop. I mean, literally walked in the pit and said, all right, I might as well throw those sheets away because I'm not going to, it doesn't even matter.
The discount rate is the interest rate at which banks lend each other money, right?
Correct.
And so when the Fed lowers that, the market goes down. The market tanks.
No, so the Fed lowered the discount rate to allow banks to borrow money at a cheaper price, right? So what that does is reduces volatility. What happened was banks weren't lending to each other, so it froze money supply, right? Things got really tight.
Yeah.
So the Fed cut the discount rate. Basically, they're open for business to help, and that reduced volatility in the short term to the market.
I imagine that you had to have seen, and the way I think I described it to you at lunch that one time is the time that I was I was walking through a casino and somebody said, you hear that crying over there. That's the sound of a man who just lost his mortgage.
Oh, yeah.
Right? You had to have seen that.
I mean, I stood next to a guy who one time just crumbled on the floor, hands in his head, and he's like, I'm done. And literally 2 seconds later, somebody tapped him on the shoulder and they dragged him out of the pit.
Yeah.
And, I gave a presentation recently, and on the presentation, there was a slide, and there's me looking up at the futures, ready to hedge a trade, and there's a couple of gentlemen around me, and 3 out of the 5 gentlemen that were around me are dead. And just from the stress, 2 of them died of drug overdose, and one actually got shot by cops.
Yeah,
he was selling drugs.
Wow.
So, and to the margin call mentality, yeah, there's people that blew out all the time. They disappear for 3-4 months, then they go try to find another backer, and they'd come back in, and then try to put that machine back on.
To me, it seems like the most useful skill that you can have is self-discipline in that world, right? Which is kind of like poker, right? Like, I mean,
100%.
Right? So how long did you
just under
do
12
that?
years. So 12 years.
Yeah. Geez. I mean, so you had to have really established a good, I think of self-discipline like a muscle.
Sure.
Like you've got to work it out all the time. And you had to have to do that for 12 years with your own money, right? Or with the margin lender's money, right?
Sure.
You and not blow out. Right.
So the hardest thing to do in the world is punt, right? So what
does that mean?
So like say someone comes in and they're offering something and I buy it for 3, and then 2 seconds later they're selling it at 2.5, and you know that it's going to go to 2, it's going to go to 1. It's just getting out and turning the page, just punting the trade, getting out of a position that sucks. Whether it's in life, whether it's for a business, an employee or a spouse or whatever, and you know that it's not going to work. The hardest thing in the drill is to punt. So it taught me very short is if you don't have a good feeling about it, if you made a trade and it's going against you, you don't believe in it, just get out, turn the page, rip the Band-Aid off, take the loss and move on. Because what happens is that it gets worse and worse and worse. And when you don't punt, you forget that the whole world's going on around you. There's other trades. There's other things that you can be focused on. So get out of it and just move on.
Yeah.
So we saw that a lot in every options trade you do. Typically, you hedge futures against it. And hedging futures locks in that volatility level. So if you were to buy a particular call or a put and you hedge it against futures and you miss your futures level, it's going to directly affect whether that was a good trade or not. What happens is if you miss your futures, the most of the time you try to work your futures to lock in that level. Well, futures are very volatile and you could really whipsaw yourself. So, at that particular sentence, it's like, listen, lock it in, move on.
Yeah. I kind of had this light bulb go off, which for me, it went off. But now when I think about it, I feel like everybody already knows this and always has. The light bulb for me was that all business planning, strategic planning, and in some ways just life planning, career planning, is very much similar to like trying to, well, it's prediction, right? Mm-hmm. It's trying to look into a crystal ball and seeing, which way is the market going to go? Are people going to want to buy my product? Is my choice of career going to be lucrative, right? I mean, most important decisions that affect how we're going to live and how our business is going to do is really an exercise in trying to predict the future, right? To me, that was a huge light bulb, and it very much informs how I counsel my clients. But what you were doing is prediction on steroids because you were day trading, right? Isn't every move that you made in some way attached to an assumption that you were making about what the future held?
So yes and no. So a lot of the time, if I did a trade, there's multiple reasons to doing a trade. One, you lock in theoretical edge or value, right? It's a good trade based on how you analyze trades. Two, it could be a relationship with the broker. So if I have a relationship with the broker, it's also a relationship game. The broker has to represent his client. So he's got an order to fill. We're the locals, but we also have to work well with the brokers so that we can get on good trades when they come into the pit. So let's say he's filling an order that's poop, right? You don't want, no one likes it. It's not really a good order, but you want to hook him up. You'll do small, right? So he can get some orders. So it looks like he's working on. So sometimes you're willing to do a bad trade or to lock in a small loser but that's creating goodwill, right? So in business, consider it marketing. It was marketing so that in the future that I could lock in when this guy has a really big order, he won't forget that I'm the one that helped him, hooked him up when he needed it, right? So it's creating, and then there's other times you do a trade, you the skill of pit trading is different in that you may not even know what the hell's going on. You just see that everybody in the world's trying to get on it. You're just better at acting like you knew what it was. Like, I can't begin to tell you, half the time you're just acting like, at two. Do you know what this is? No, I don't, but at two. And then you fill it and you're like, look to the guy next to you, you're like,
what did I just buy?
Yeah, what do I need to do with my futures? So, I mean, it's acting and,
that's hilarious. I'm sure you saw The Big Short, right?
I did, yep.
All right. So there's this handful of investors that saw that the real estate market was just hysteria, right? It was just it was fluff. It was non-substantive, right? It was just kind of like every bubble, right? There's this handful of investors that say this thing is definitely going to burst, and even if everyone thinks we're idiots, we're putting all our money on the short that it's going to burst, right? So that is truly an exercise in crystal balls, right? And predicting the future. How much of that is what you were doing?
So I think it was a mixture. So you have your main position that you have on, and at that point in time, you're judging where volatility is going to be. We'll use an example. Options are different than, and I'll get into this a little bit later, but options, they have an expiration date. Right. And typically, as a proprietary trader that's acting as liquidity provider to the marketplace, our positions weren't that long, right? We weren't taking a multi-year prediction. You're taking a multi-month at the longest. So you're really predicting what's going to happen in the short term, what's going to happen in the next week, 2 weeks, 3 weeks, what happens in unemployment. If the unemployment number is strong and interest rates, they predict that interest rates are going to go up, therefore futures go down. What's volatility going to do when you're down 25? So you're predicting what's going to happen in the short term and then building a position around that. What's funny about it is that paper, we call it paper, but that's the large institutional firms like Goldman or these people that are a lot smarter than we are that have CFAs and economists and things on staff. They have an idea of where it's going to go. So I'll give you one example. After the Great Recession, interest rates remain low for an extended period of time. Our futures, we covered, futures where the LIBOR was going to settle 3 months from now, 6 months from now, 9 months from now, all the way to five years out on the curve. All of them started this slow rally. So what paper did is they put on this large trade where they'd buy one call and they would sell you 2 calls. And as we got up there, volatility would just get smoked, right? So it would just get smoked and you buy 1 call, sell 2 calls, and they would just bring in volatility because as we had this slow march higher, there was less uncertainty in the marketplace, so they just sucked all volatility out.
And you're betting on volatility, right?
So we're taking the other side of this large firm. So or large bets that people a lot smarter than us have. So how can we make it that they're right and we're right? So there's a way that we moved our analyzer to lower. I don't want to get into too technical, but we lowered the limits and changed the deltas on our options so that when we did rally, we basically said, okay, if we're going to rally, you're the shark, right? We're just going to be swimming behind you. We can profit from it too. So when in theory it should be sucking in volatility, to our analyzers, volatility was going bid. So it looked like we were actually making money behind paper on this trade, and that just took there's a way that it's not a zero-sum game. Like they won and we won at the same time.
Right, but if they lost, you lost too. Right.
Essentially, yeah. I mean, you could have.
So you're still betting on what the crowd is doing in that situation, right?
Everyone has the same hand.
Yeah.
So if everyone has the same hand, how can we make it that we can reduce the pain? Like if we're all holding the same hand and we're all not going to get out, how can I lessen my burden, right? Like how can I make it less painful?
At some point in the mid 2000s, although I'm sure I was late to the game here, I became aware of these things called QUANTS. So these are quantitative. These are like supercomputers, right? That make trades in milliseconds based on like information coming in from the market, and then within a few milliseconds, a trade happens, right? I've understood them to be anti-competitive, not fair to people who are not relying on them. I guess am I describing them correctly, and B, how did it affect your trading?
So I think that quants, or algorithmic based trading and things have definitely revolutionized the way trading desks it's depleted traders, or the traders,
right.
Everything's electronic now. What was interesting about the pit that I traded in is, even to this day, the majority of the options are still filled on the floor, because the complexity of the product and how you quote it. If you go on the screen, or you go what we call the screen, but if you go on electronic, the spreads are so wide when things get volatile that you need the pit to fill the liquidity. But quants have definitely revolutionized the way the industry's gone, right? So now you look at primarily in the equity or the futures markets or the fixed income. Electronic trading is taken over. I mean, that's where the majority of the orders are filled. That's where the majority of the and it reduces this, the spreads. So there is really no money. I mean, I think the most expensive real estate is the pipe in Manhattan, right?
Yeah.
From the New York Stock Exchange to a computer,
right?
But it's definitely revolutionized the way we did business.
How did it affect your job, basically? How did it affect what you were doing on a day-to-day basis?
So it made it harder and harder to compete.
Okay,
so
right.
So because a lot of the game of trading, especially pit trading, was the nuance of you used the word poker, but it was a game. So that if someone came in before unemployment, someone before a big number, they came in and they bought a bunch of calls because they thought we were going to rally. And they bought a bunch of calls. We did rally. Well, the guy needs to get out now, right? So he's going to get out of his trade. So now he's going to sell these calls back to you. You look at the guys next to you and he's quoting the same call. He's got 50,000 to sell. So you kind of fade the market, right? So if you know on your sheets or your analyzer you have it worth 2, you may make it 1/2 2. You're offering it, or you may make it 1/1/2 so that he sells you the ones. And I'm not saying it's collusion; it's perfectly legal. But I mean, you work with that does not happen anymore. Now the market we're 1.9 to 2.1, right? Like the spreads, it no longer exists.
Yeah. What was the most ludicrous, expensive, on your biggest celebration day in Chicago when you guys just crushed it and you went out to party that night? Did anyone buy like a mountain lion?
Well, that's fun. That's funny. So I'm not gonna use us, because we were a pretty boring group. Like that's where I was very fortunate in the sense that the guys that I work with were very family oriented. They generally cared about their employees. It was kind of an incestuous group that we all had kids together and we all worked out together, and we all and it all started with our principals of the firm. Like Will and Alvin and Cal created this atmosphere for us to just grow as good people. But I stood next to people who, one dude made $1 million on one trade and went and bought a Porsche. Literally left the office and went and bought a Porsche. Right. Another guy, he disappeared for 3 days because he had his face full of he was on everything but skates, and he enjoyed himself. Yeah. So I mean, but if I've seen it. Name it, I've seen it.
Yeah, it's good that you ran in a more conservative crowd.
Oh, I'm not kidding you. I look around and I see legitimately good people that passed away of drug overdoses or stress or
Well, and I mean that goes to, I mean, the fact that you did that for 12 years and I mean, it goes back to that self-discipline muscle, right? I mean, I don't know how you can have that role, that job where you're basically just betting all the time. And then I mean, it's like lawyers. I know that it's difficult for them to separate their courtroom persona from their home persona, right? And they have this high adrenaline, high intensity day, and then they come home and they argue with their wives and their kids, and it doesn't make for a good relationship. So that kind of self-control, you also see lawyers who do have that kind of self-control. But that too, that carries over into their trial experience too. Anyway, at some point, you end that part of your life and you make it over to Sequoia. How does that move happen?
Sure. So what started it was when MF Global went under. MF Global was John Corzine was the governor of New Jersey, former partner of Goldman Sachs. He was the CEO and chairman of MF Global, and he segregated and non-segregated funds. He combined the two, put on a huge bet, and lost $7 billion for his firm. That was our clearinghouse. So when we talk about all our money was tied up in one particular clearinghouse, so we had funds frozen, so we couldn't trade. And I remember there was a week there where we had a large position on. Our firm did the best to help us, get back up and running, but we still lost a considerable amount of money on our P&Ls. And I remember going home that night, and I just had a kid, and my first son. It was our first Halloween, and I remember saying to my wife, "I'm like, man, we did everything right, and it just was beyond our control. Like, I just had this uneasy feeling." So I remember that night putting a thing, like maybe I should start to look elsewhere. Like, and then as the computer started to take over more and more of the trading, I realized, like, man, when I look forward 10 years from now, I don't want to be sitting in front of a computer just day trading an algorithm. Like, right. What I love about what I did at the time was you had great relationships with the brokers. There was a relationship, and there was really cool experiences. So I'll make this quick. We had two things happened. One, this was just this was 2014. The location that we lived in Chicago, the school across the street from us got a $20 million grant. So a house a couple doors down from us, 1,000 less square feet, sold for a couple $100,000 more than we paid for our house. So I look at my wife and I'm like, geez, oh man, let's just throw our house up for sale, or to put a for sale sign on our house. And, worst case, we'll move out to the burbs near your parents and we'll make this work. Because I grew up in the suburbs. My wife grew up in the suburbs. So we threw a for sale sign in front of our house. It sold in less than 24 hours. I was like, oh boy. And I remember at the time, like, I just, again, had this uneasy feeling about what I wanted to do with my life and career. And at the time, my wife and I kept saying quality of life's number one. We want our kids to grow up, whether you have a $5 or $5 billion, we want our kids to just grow up as normal kids, cut the grass, play in the yard, do just normal, the way that I grew up and the way my wife grew up. So I walk in and I have it framed. I should have brought it in. It's in our office, but my buddy at the desk next to me had this cheesy calendar, one of those things you rip off, and has a quote, and it said, "Don't expect others to listen to your advice and ignore your actions." So if I kept saying quality of life meant the most to me, being there for my kids, living the life that we desire to live, then I got to act on it. So at the time, it would coincide with my in-laws had said, listen, don't look at a house around where we're going to live. We're moving to California in the next year or two. We're going to retire, move out there. So my wife and I put our heads together and we're like, you know what? It's going to be really hard, but let's move back to Cleveland. I'm from Cleveland. My family's from Cleveland. If I have to start over in a new job, I knew I was going to start over and start from scratch, right? And so I said, if we're going to do it, let's do it in Cleveland. I have a pretty good network there. That's where I grew up. And our kids would never know the difference. By the time they get to an age where they can remember what dad does for a living, like hopefully that the pain we've already gone through that pain. So we sold. I moved back. My wife said, I only have one thing. You have to have health insurance for the kids. So thankfully, and
it's pretty low expectations. What's your wife's name?
Jill.
Jill, what a great. That seems relatively straightforward. I like it.
Well, Jill's been like the best support system. She's like, I trust you. Whatever you whatever you think, and like I believe in it. Like whatever this is what we core believe, and I believe that we're going to get it done together. So awesome. we moved back. I got a job working for UBS, and at the time I knew I wanted to get in the financial service area. I mean, I love the capital market side of the business. But I also love the relationship side, right? I love like word math, like problem solving. Like how can we help? I was committed to working for UBS, and at the time, the business model of the wirehouses and the banks, I don't necessarily agree with, especially as it relates to. And this isn't a knock on the advisors themselves, just the model of the banks and the wirehouses. I wanted more of a independent consulting type gig, and I was networking and came across the president of Cohen & Company, and midway through our first cup of coffee, he's like, I'm flipping this on you, but I think you should come work for us. We have this independent registered investment advisory arm called Sequoia. We work a ton with business owners. I think you'd be a great fit. I think that you could benefit from exploring it. I said, great. So that week set up an opportunity, met with the principals of Sequoia. Next thing you know, that's where I ended up. It's been a match made in heaven because really my core clients, the people that I work with, and it's been 6 years. I've been with Sequoia 6 years. So the core clients that I work with are business owners and entrepreneurs, and they're unique, and the complexities of their situation are so much different than that of a regular rank and file. And I love it.
You are you're the vice president, private client services. That's your so. You when you explained it to me the other day, it really piqued my interest. You think of Sequoia, you think of Cohen & Company, you think of a financial advisory firm, and I think of like wealth management, right? I think of financial advice to individuals and to business owners on how to use their money, right? How to invest it, right? But that's not what you do. You actually, if I've got this right, TJ, you advise businesses on how to operate better. Do I have that right?
I think it starts with the first part. So we're a wealth planning firm, a financial planning firm that's dedicated to helping business owners think through their business, their financial life, and then their personal life. So we use the business. 90% of our business owners, 90% of their net worth is tied up in the business.
Right.
So it's their main tool to retirement. So our job is to help quantify what financial independence, which I think is so cheesy. I mean, that you see it on commercials, but really, what does freedom of time look like for these business owners? And with that, we do manage money. We manage $4.5 billion of assets. We help them with their liquidity events. But before that is really getting an understanding of what their main tool is, their business. Right. And as the business grows and there's areas that we can help, whether it's capital structure or strategic succession planning, things like that, we can offer guidance there where a lot of our competitors can't.
Yeah. So give me an example, right? So I'm a typical client of yours. What am I generally going to be coming to you to talk to you about, and how are you advising me?
So it's funny. So if you're coming to me, I would say that's a rarity, and I say that with a smile on my face. I think that most people in my line of work, it's a misconception, right? So like if I'm standing at the T-ball game, someone asks you what you do and you say, I'm a financial advisor, they think, oh man, this guy just wants to manage my money, right? Like he wants to put my money in an allocation and try to outperform the index. For us, typically when a catalyst, especially with the business owners, their time is their most valuable asset. So when they come to us, there's a catalyst. Someone knocked on their door, wants to sell, or they have a son coming into the business or daughter, and they don't know how to integrate them into the business, right? Or their partner died. So there's a catalyst of why they're coming to us. So when we meet with the clients, we have to, first of all, we do a financial plan. So everything we lead is with the financial plan. I think it's ludicrous to help to advise clients if I don't really understand what's important to them, what they're trying to accomplish. Then that's the core. Right. So we begin with a financial plan, and typically with business owners, we talk primarily about the business, right? And help us understand where cash flow is, and help us understand growth rates, help us understand, the capital structure, help us understand the real estate component, and, X, Y, Z.
So I had it a little bit wrong. In fact, you're not actually helping them operate their business. It sounds to me like you're helping them manage the financial aspect of their business. Correct.
As it relates to them personally.
Right.
Yeah.
The owner's interest in the business.
Correct.
Right.
Mm-hmm.
So you're wrapping your head around the capital structure, his ownership or her ownership. You're helping them invest that money, but I'm right there with you. All of our clients are businesses and business owners just about. So I'm very well aware, and I'm a walking example of the fact that most of your money is tied up in your business when you're a small business owner, right? So how do you help me as a small or mid-sized business owner whose most of whose investments are tied up in the business?
So first, it's getting an understanding of what you're a young guy, right? So most of the time, business owners, when it depends on your business, exit. What does exit look like?
Yeah.
And it doesn't mean you have to say, if your goal, planning is really a series of 3 to 5 years. Unless you have a distinct goal of saying, I want to monetize in 2023, a lot of it is, okay, well, what type of business is this? Is it a consulting practice? Is it a legal practice? Is it a manufacturing company? Understanding the business, then understanding who's a likely buyer of that business. I'm not saying that monetization is our goal, but we always have to know in the back of our head, if it's a consulting business or a cash flow heavy business, we know that to fund your independence, you're going to have to sock more money away and put it in your pocket, right? So there isn't like you can monetize. This isn't an asset that warrants a 4 to 7 times EBITDA multiple or whatever, I'm using it as an example. So the question would be, okay, let's take a good understanding, help us understand your practice. Are there other lawyers that are in the practice? Any other partners? Are there any revenue producing members of the firm that that derive real revenue?
And what you're trying to figure out is, what is the value of my business today, and what is the likely value going to be over time?
Correct. And then in the short term, understanding your cash flow. I need to understand what it takes in order for you to live a good quality life, and understand what's the minimum we need to achieve that. And then it helps us think through what are some tax efficient saving vehicles. And we know we have the typical 401k, profit sharing, maybe a cash balance plan. But then understanding, what does your balance sheet look like? What do we do with that excess cash flow? And so how do we reinvest that excess cash flow? And both for the business and both for you personally.
So if most of your clients' money is tied up in the business, right, and whatever they take out, for the most part, is covering their mortgage and their credit card expenses and whatever, right, child support, and there isn't a big 401k, there isn't an IRA, right? What's the advice?
Well, I think that I think a lot of it is let's take a deeper look. Like how do we look at your business? Are there other areas that we can make your business less about just you being the sole practitioner, you being the main revenue source, to create more of scalability in that practice, right? When we look at a lot of business owners and they say they're growing at 4 or 5% and they have all their net worth in it, it's like, well, you're sure as hell taking a lot of risk having that business. Now, granted, you control that, you control your time, you control the business, but you have no liquidity, right? All your assets are tied in the business. You're better off selling the business, putting the money in the public markets, and going and getting a W-2 job where you're making the same wages, right? So I think that everybody needs to have a plan. First, we plan for the catastrophic. You see it all the time. What happens if in the what-if scenarios, right? And that's, everyone always tries to lead with scare. Like, what happens if you die tomorrow? What happens if you get disabled? Okay, those are scare tactics. But I do believe that business owners are inherently optimistic. They're going to live forever. So how do you get them to say, you know what? Okay, what happens if I'm not here tomorrow? And most of the time, those that are married and have families will say, I don't want my family to have a huge shitstorm, right? Like I want to protect my family in the event of that. Okay, so tell me what I need to do, right? So we build out a catastrophic succession plan. This is what would happen. Do we have life insurance proceeds, et cetera? So the easy part is to shore up against the flood, right? The next part is to think through the strategic. Okay, so if I want to retire at 62, I'm going to throw that number out there, what are some things that I need to start doing now to make my business more profitable, to save more money, or to reduce my spend? Or, it sounds so, the one thing, we can never control how much money we make, but we can control how much money we spend, right? And just getting an understanding of cash flows and understanding of where money's going, both in the business and on the home front, really makes it much easier. Yeah. And so
let's talk about recessions, right? So speaking of the holy shit, catastrophic event, right? So you put on a really great event at Sequoia the other day, and it was Leon Lebrecq?
Lebrecq, yeah.
Lebrecq, yeah. Man, it was terrifying at times, right? So it was. I think the event, it was called Critical Intelligence for the Next Decade or something like that. Which I told him, I said, whatever marketing geniuses you guys had to come up with that title, brilliant, because like who doesn't want critical intelligence, right? Like, no, I'm good on the critical intelligence. Just I'll pass on that, right? But it seemed like parts of it were, one chart after another showing all of the indicators historically, right, between the political parties and between like world events, and all these indicators, and it sure seemed like there's a recession coming, right? To me, But then he was like, all right, well, look, that is an opportunity to make money, and it goes back to what I was saying earlier about, just it all being just about crystal balls, like he seemed like he really had a good sense of what's coming up. Do you think there's a recession coming?
Well, I absolutely think a recession is coming, but when, I don't know.
Right.
If I knew, I'd be on a boat in the Bahamas.
Yeah,
right? But I certainly believe that what creates recessions are good economies, right?
Yeah.
And we've had a great economy over the past, we've gone straight up for 11 years. So
it's cyclical. You can't always be going up. You have to have corrections.
Correct.
Right. But going back to what you were saying earlier, right? So again, now I'm, your typical entrepreneur, right? Most of my money's in my business. And I'm coming in to see TJ to reallocate, to get advice, to get strategic planning help, right? And I say, TJ, I just saw Leon's charts up here, and it sure seems like something's coming down, recession-wise. Specifically, what are you saying to me?
So I would say, first of all, we'd look at, cash reserves is critically important. Do we have enough cash reserves in the business and on the home front to weather an economic downturn? Whether it's your business or another business, things slow down. Secondly, have we gone and let's review your line of credit, your facility with the banks. Let's think banks are willing to lend right now, so let's go and get money. Right, we may not need it. Let's just go and get it. Right. Yeah. So let's go and reevaluate our lending capacity, and can we renegotiate our facility for better rates, more, et cetera.
And by the way, are you helping your clients find lenders?
Absolutely.
Okay.
That's probably where I spend a lot of my time is saying, okay, I don't have relationships with banks. I don't really like my bank. Can you help me? So we'll go out and run an RFP process for our clients and bring in 3 banks that we think would be a great fit. And then we help find the right match for our clients.
Do you also help them find investors?
If need be, yeah.
Okay.
I think we've helped. Just last year, helped over a dozen clients monetize their businesses, help them find the correct investment banker, help them vet the process. A lot of these, you get one chance to sell your business, right? And so a lot of times, and we want our business owners to allow them to continue to operate and run their business, right? And that whole process in and of itself takes them out of the game for 6 to 12 months. And God forbid the deal doesn't go through. Now they have to go back to all systems on go, and it's awfully, awfully hard for business owners. Emotionally, physically, can be taxing. So we can come in and help identifying, help run that process for the business owner so they can focus on their business, focus on their family, and then we can take care of all the other things.
I think I cut you off when you were going through the list of things that you would have your client look at in a recession probable situation, right?
So I think it also goes back to you look at your employees, right? So and I'm not saying we rank people like A, B's, and C's, but I would. I'd look at your employees, and unfortunately for most of the businesses, overhead's the most expensive cost that they have is the people. And also I'd look at our if there's people that we need to let go, do we need them? And then ultimately, who if we had a recession, right? Who would we want to fill, right? What type of positions? Because there's going to be talent that's going to be left on the marketplace by other firms that had to let go. If we've leaned ourselves up ahead of time, when a recession comes, I know that whatever you do, those investments are going to pay 10x. So if we have cash reserves, we have dry powder, we want to make strategic acquisitions. I'll tell you this: if you love the competitor down the street for $10, and their principal is older, and they get through a recession, and now they don't have the stomach anymore to go through it, you're going to love them for $8, right? Yeah. So it's a wonderful opportunity to buy new equipment, get new employees, put to work good hard cash. And then if you think about it in the public markets, same thing. Like if we love Apple at whatever it is today, 318, you're going to love it when it's 250. So having that dry powder to be able to put to work, to me, I would welcome a recession. It's like cleaning out the garden, right? Yeah. And it resets the bar, it resets value. It allows for good businesses to clean house and makes it even more effective and more efficient in the future.
Right. Well, ultimately, it goes back to good planning, though, yes. Right? It goes back to having that self-discipline muscle, right? You love a recession because you're good at planning,
right?
For the folks who are getting cleaned out. When the garden gets cleaned out, it's because they didn't plan well, right? They were over leveraged, or they had their expenses were too high, or whatever, right? And when their customers tighten up, they're stuck, right?
That's correct.
So we are going to take a very short break, and when we come back, we're going to do I've got a few follow-up questions on that, and then we're going to do the lightning round.
Sure.
All right. Be right back, folks. Hey, folks. Alex Gertzberg here. I'm CEO of the Gertzberg Law Firm and Cover My Six, and I wanted to share with you something we figured out long ago. The biggest value lawyers can give their clients is not getting them out of trouble. It's helping them avoid emergencies before they blow up. That's what Cover My Six is all about. To help you see why we're so confident in this audit, we're offering a no-cost, no-obligation business vulnerability assessment. My business lawyers will meet with you in person and go over your customer contracts, your employee handbooks, and other key legal documents, and identify any legal minefields they see. We'll also give you guidance on how to stop those minefields from destroying your business. We know lawsuits cost businesses far more than money, but we also know that most of them are entirely preventable, and we know how to stop them before they start. Go to covermysix.com to see if you qualify and sign up today. Thanks, and enjoy the rest of the show. All right, we're back. TJ, is there anything that I didn't ask about what you do that you think either the folks listening might misperceive about your world, about Sequoia? Anything I should have asked that I didn't, that you can think of?
No, I mean, I think you hit it on. I think you asked the right questions. I just think that there's a moving forward. I mean, I think that in the industry itself, if for business owners, I mean, we have a great deal of experience in working on, and I mean, our firm was founded 30 years ago on surrounding the needs of business owners. So we see and have experienced a ton, and we can help. I mean, our primary client base are those entrepreneurs that it all starts with the planning process. We got to understand what our goals are on the personal front, and we help navigate using the business as the main tool to drive that freedom, that independence, whether it's succession, whether it's monetization, whether it's just sustainability. You know, we can help.
Am I remembering this correctly? Did you tell me over lunch how Sequoia got founded? Was there an origin story there that's kind of interesting?
The founder, Tom Haught, was a VP of finance for a large, successful, privately held company, and through the process, the principal of the firm would always ask Tom for help and recommendations and things. And Tom realized at the time there was a need in the marketplace to help entrepreneurs like this gentleman, and so he started Sequoia, and the rest is history. And then partnered with so in 1999, 2000. Cohen was around since 1977 as the region's largest accounting firm for private business. They were looking for a financial planning arm. A lot of their clients would say, okay, I have this business. What do I do with it now? Like I need to sell it. Do I have enough to retire? Do I need more life insurance? Do I have my estate planning? I don't have any of this done. Can you help? And they would say, not really. We don't have that service. So Tom and Randy were Randy Meyerhoff's been the longtime CEO of Cohen. Tom's the CEO and president of Sequoia. They were representing clients in 99, 2000. They were each representing their own client. Well, the deal didn't go through, but afterwards, Randy and Tom loved the way that they conducted business, loved the core premise of taking client service, the value proposition, et cetera. Cohen bought a minority stake in Sequoia, and it's been the match made in heaven ever since.
The older I get, the more exposure I and we as a firm get to companies like yours. I just had lunch with our tax accountant who was at Skoda, and they're now Markham. But the more I learn about your world, the more I appreciate how financial advisory firms that aren't just about financial advice, right? That aren't just about investment advice, or in Skoda's case, it was a CPA firm, right? And they now, and they grow into this public business services firm, and then they, start acquiring IT companies and HR companies and insurance, wealth right? The more the company expands beyond just traditional, its traditional box, right? CPA or wealth management or financial service or whatever. It really is all about solving problems for your clients. It's all about helping them grow find customers, find sources of lending, do strategic planning. It seems like those are the companies that stand the test of time. And I mean, we try to do it here at the firm too, but ultimately I start appreciating a lot more, and I start seeing more, in my periphery, that those are the companies you really have to, look up to, right? Those are the ones that are growing and are withstanding, economic problems. They're the companies that really just take care of their clients beyond just the traditional way. More of a holistic, more like wrapping your arms around your client and solving other problems that they've got in their business or in their personal lives or whatever. So I'm babbling here, but it seems like Sequoia is doing that.
Yeah, I mean, our premise is really, let's build the infrastructure, the framework to make really good decisions, right? Whether it's to monetize your business, whether investments is a critical component of it, right? We're not going to lie. Our job is to make sure we don't make any major errors, right?
Yeah.
Like when you have a business owner and he has 90% of his net worth in the business, he controls it. All of a sudden he sells the business and says, all right, now I'm giving you $20 million and you're going to invest in the public markets. And that person's never had any experience in dealing with that. That's a tough transition, right? You go from having 100% to control to no control. And so, we're very sensitive to that. And you have to, this person's never had an investment profile. So investments are really important, but I think it's a small piece of what we do.
Yeah. I was thinking too, another way to describe what you do, it seems to me, is you help people with their blind spots, right? You issue spot, you identify things in their business or in their investment world that they haven't thought of, right? I mean, is that a fair characterization?
Yeah.
Okay. You ready for the lightning round?
Sure. Hit me up.
This is either going to be the stupidest or the most stressful part of your day.
Okay.
Right? Or both. I mean,
Perfect.
Yeah. Okay. TJ, favorite time period in history?
World War II.
Why?
I just think it's called the greatest generation for a reason.
Yeah.
What they've endured and what they went through at 19 years old, getting shot over the Pacific. Like, I can't even imagine that, right? Then they came back and had to live a normal life, raise family. I mean, it's just an incredible time.
Yeah. It's an easy time to think about whenever you want some easy perspective, right?
Amen. Yeah.
Like whenever you think you're having a bad day, right? I was thinking the other day that the next time I complain about anything, all I have to do is realize that within the last century they had no anesthesia.
Yeah,
right?
exactly. You
like
bite down on a stick.
Yeah, they were sawing people's legs off, right, and giving them like bourbon.
Yeah,
I mean,
drink this.
Yeah. What is an assumption you had for a long time that you later found out to be bullshit or realized was bullshit?
It's a great question. I think people don't care. What I mean by that is people generally care about you. They want what's in the best interest of you. But no one cares what you're wearing. No one cares what kind of car you drive. No one cares what inside of your house looks like, what your fancy. No one cares.
Yeah.
Everyone is so focused on their own life. People, you go to the gym and you're afraid you feel self-conscious of what you're wearing. No one cares. Everybody's feeling the same way.
Yeah.
I just, at the end of the day, no one cares.
So was there a period in your life when you thought that everyone gave a shit about something you were doing?
Well, I think
or
I felt like I needed to do it. I needed to validate,
okay.
Success. You need to have this, or you need to do this, so that I check something off the box, and then after a while, you're like, wait a second, it doesn't matter. It doesn't matter. And it's one of my friends that he's got more money than he ever do with. He wears board shorts and a t-shirt all day, and I'm like, that's living. You know what I mean? Because at the end of the day, it doesn't matter. What really matters is the relationships you have with your family, your friends, your clients. That's what matters. All the other crap. And it took, I'm still young, I'm 40, but I had a lot of success early in my career, and I thought that I had to validate that. And now the older I get, the more I'm kind of turned off by it.
My manifestation of that is I have to remind myself that nobody cares about something stupid you did, right? Nobody, I fixate, whenever I give talks, I get up in front of a large group and I give a talk, and the one thing that I said in the talk that I second guessed afterwards. I'm convinced that everyone thought I was an idiot, right? Nobody's thinking about you. Nobody gives a shit about you.
99% of the time when you're speaking in large groups, they want you to succeed. They're rooting for you. Right. You're the only one that's like caused that fear, that anxiety in you.
Yeah. What is the non-religious book or author whose words you apply the most in your life on a day-to-day basis?
So that's a great question. I read a ton, and I'll give you two. One's not a book, but every year I recommend all the listeners go listen to Jamie Dimon's Harvard Business School 2009 commencement speech. All right, it's 41 minutes, 42 minutes. You can YouTube it. I think it's fantastic. It teaches you to, qualities of a good leader, allowing and encouraging your employees to fail, the value of integrity. It's just a fantastic 42 minutes, and I like to revisit it once a year just to kind of restart the engine. I love that. And most recently I read a book. It's called When Breath Becomes Air. And, you're meant to read it. I picked it up. I randomly selected it and read it. It's about a neurosurgeon who, in his late 30s, was diagnosed with cancer and passed away. And he started the book right when he was diagnosed, and he unfortunately wasn't able to finish the book. His wife wrote the last chapter. But it was another, not that we need another view of perspective, but it was another lesson in perspective in what really matters most in our life. And so it just, the Jamie Dimon thing in that book in particular, just most recently, is like, I want to go home with my kids and play hide and seek in the basement. And I don't want to give that time up, because when my kids are older, or when they're out of the house, I can't ever buy that time. I can't trade that time. It's finite. So it was a good lesson. It's just good to revisit that.
Are most books that you read nonfiction?
I like to mix it up. I mean, I think that most of the time they're nonfiction, but then I like to throw a couple fictions in there just because it's more interesting. Like Gentleman in Moscow, I love that book. I read it 2 years ago. It was a fantastic book. I really, really enjoyed it. It was a nonfiction about a gentleman who was imprisoned in Moscow's 5-star hotel for the rest of his life, and it just talked about his experiences and things. It was a fantastic book.
There's one I'm reading right now called The Traitor and the Spy. Do you know that book?
Mm-mm.
It's about the KGB's highest level. Like, he was like the number 2 at the KGB, and he was run by the British Secret Service, by MI6 for like 20 years. It is a nail biter. Yeah, if you like that kind of book, yeah, Traitor and the Spy, it's fascinating. There's another commencement speech. It's Admiral McRaven's.
Always Make Your Bed.
You know that one?
Yeah, I love that one.
That's a good one to remind yourself and to listen with your kids.
Yep.
Every once in a while. But I'm definitely checking out that Jamie Dimon one. All right, you're a professional boxer.
Mm-hmm.
What song is playing as you're entering the ring?
It sounds kind of cliche, but I'm gonna go with Eminem. Like Eminem, like Cinderella Man or something like that. Like, it's so different if I was chilling outside in a summer night listening to like slide guitar, but like this is like I'd be listening to probably Eminem.
Do you listen to a lot of rap?
I do. I mean, I grew up in the 90s, like I love Biggie and Tupac, and it's so funny. I have to be careful with my kids in the car. Right. I can't really be blasting it, but I love hip hop.
Yeah. So I guess there's I do too. And that's all I listened to growing up. But I guess there's a Beastie Boys documentary coming out. Have you seen
awesome.
that?
I haven't.
Yeah. I think it might be on Apple TV. But I can't wait to see it. There's always something funny to me. I like there was a period in my life where all I listened to was gangster rap. And my friends and I, we would just, it was like that scene in Office Space, right?
Oh,
when
yeah.
they're destroying the printer, right? Like, there's something just hilarious to me still to this day when, like, I find myself just this white guy singing gangster rap running through my house like an idiot.
I am the least gangster looking person on the planet, so I'm blasting NWA
you
or
will
something.
Bust out the NWA, though. Yeah,
absolutely.
Did you used to watch UMTV Raps?
I did. Oh, yeah.
Religiously, right?
I loved it. And actually, who I follow now is Jesse Itzler. Do you know who Jesse Itzler is? He was his wife is the woman who started Sarah Blakely, I think her name is. She's the woman who started Spanx. She was an EO member out of Atlanta. And he himself was a serial entrepreneur, was a producer, actually worked with one of the members of Run DMC. He was founder and investor in Marquis Jets. He's now going around the country and in the world helping talk about build your life resume as opposed to building your work resume and where you came from, but what cool activities can you do to enhance your quality of life and actually be a more interesting person. And and for those that haven't read it, he also had a book called Living with the SEAL. And he had a Navy SEAL come in. David Goggins was actually the Navy SEAL that lived with him for 30 days. And it's a really cool, quick read.
David Goggins has a book out now.
Can't Hurt Me Now.
That's it. Yeah. That dude's got a crazy story.
So I've read that book too. He's got a crazy story. Just this pain threshold and his motto, just like all the other Navy SEALs, is you can put your body through damn near anything. It's mentally, can you stay tough enough to endure it?
There is, before we get off of gangster rap, although this isn't gangster rap, this is just hip hop. There is this amazing documentary I saw not long ago about Tribe Called Quest. It describes how that band disintegrated, right, through conflict and then reconnected. Fascinating.
Awesome.
Highly recommend. You are a Tribe fan, I know.
Oh,
right?
yeah.
Of course. All right, TJ, the habit or routine that you do on a regular basis today that's given you the most mileage?
Absolutely. So I mean, for this, it's been, I mean, I've done this for years. I wake up every morning. I have a cup of coffee. I read, say some prayers, and then I work out every day. Like literally, I can't start my day without doing that.
What's the workout regimen? Is it do you rotate like every 3 days?
No, so I would most recently now I'm training for an event by a buddy and client who is putting on what's called a Day of Madness. And you wake up 5 a.m., butts on the surfboard, you go surfing. You surf in San Diego. Then you immediately...
Do you know how to surf?
I don't. I've surfed a couple times, but not...
So you're going to learn how to surf for this event?
Correct. And then you drop the board, you run the Encinitas half marathon, immediately go play 18 holes of golf, and then you finish the day night skiing. So right now I've just been running to try to get in shape for that.
I have so many questions.
Hit me.
So when is this event?
It's in March.
So you're going to learn how to surf in the next month and a half.
Yeah, I'm going to try.
And you're going to go to like California to learn how to surf, presumably?
Well, right now I have one of those like balance boards, like in my house, just to do that. And the actual event, like I think the hardest part is just going to be get over that wake, right? To get out to where even the surf is. I think it's just going to require, strong shoulders and things. But as far as if I can get up on the board once, I'll call that a success.
Yeah, well, that's the hardest part.
Yeah,
I've tried it, and once I was able to get on the board, I found it not as hard to stay up, but getting up and then just staying up there for like 5-10 seconds, I found extremely difficult.
Yeah.
So where exactly do you golf and night ski?
I have no idea.
In the same 24-hour period.
It's all in California. So you're waking up, you're surfing, and at the end of the day, you're going to be skiing. And California is probably one of the only places in the world where you can do both in a 3-hour period, 3-hour radius. So we're going to be. It's going to be a really fun, interesting day. I know that he had hundreds and hundreds of applicants to do this, and he only selected 24. So there's 24 dudes, and a couple of the guys are some of the most elite ultramarathoners in the world. These guys just do this for fun. So the buddy of mine who's putting this on he's done a kabillion ultramarathons. He's trekked. He's actually in a month going to Siberia to trek Lake Baikal.
Wow.
Yeah.
Have you So to me, the surfing seems like it would be really difficult if you didn't know how to surf, but playing golf after running a half marathon seems like an exercise in frustration to me.
You know, I'm actually I'm not by no means a good golfer. I think I could go and run a half marathon and play 18 holes of golf.
Well, no. I'm not saying no, it could be done and like from a physical standpoint, but playing with any degree of skill.
I think I'd actually play better.
When you're that tired?
Well, you're just going to be swinging. You're going to let the club do its work. I mean, I don't know about you. Like every time I grab the golf club, my veins are popping out here. Like you just go and swing nice and easy. You're kind of forced to.
I can't wait to hear how this plays out.
Me
for
too.
you.
It's gonna be. I can't wait too. And these guys, they're crazy cats. So it's gonna be fun. My job is just to finish it and have a hell of a day.
Do you run do you do those Tough Mudder and
I did once. I did a Camp Pendleton run in 2000, like mid 2000s. We went and did the Camp Pendleton run, which is like a 6-mile marine obstacle course at Camp Pendleton base. We did that. It was fun. But like when I voluntarily sign up for some dude to electrocute me, I call uncle. No, I mean like some of these mud runs and in these warrior runs, you have to climb through and they spray you with a hose, and then there's like electrical thing. Like, life's hard enough. I don't even want to do that.
Jump through fire.
Yeah.
You'll have to report back to us on what's it called?
The Day of Madness.
The Day of Madness.
Yeah. Point Break theme.
That sounds appropriate. TJ, describe a time in your life when you had a massive personal or business failure and how you bounced back.
I can say I voluntarily did it. When I left the trading industry and left a perceived peak of a career that I could still be doing now and having a lot of success in, and working with some of my best friends on the planet, and my wife was we voluntarily made a tough decision because we thought it would be in the best interest of our kids and the quality of life and building the foundation for the next 30 years of our life. I started all over again. I started all over, literally making no money, starting all over again. I had to rebuild my brand, rebuild my business, rebuild everything.
But why was that? Why do you consider that a failure?
I don't. It's not a failure.
Okay.
It's a success now. But I'm saying I voluntarily took what could have been, an easy, comfortable existence, and said, you know what, I'm going to flip it upside down, and I'm going to voluntarily make this really hard.
Right. In other words, it's you walked away from something that you had built, and some could characterize that as a failure. You characterize that as basically just a break and then a rebuilding.
Correct.
Yeah. Okay.
Which I think is often even harder.
For sure.
Yeah, because like I said before, the hardest part is when you fail and you're forced to do something. But here we made a really tough decision when our friends and our families are like, "You guys are out of your mind."
Yeah.
Yeah.
You see the irony in calling it the lightning round, right? There's nothing fast about this at all.
Well, I can talk for hours. So.
Yeah. No. I echo what you just said. I think that people who, myself included, like walk away from like a marriage, right? People who terminate a relationship that they've built and cultivated, had kids in. But for some people, me included, it's the proudest thing of your life because it's so challenging, and you're walking away from some comfort level, knowing that you are not happy where you are, and you are walking head first into the unknown, right? And just having nothing but your own self-confidence to rely on to start over and build up. So I think that that's a tremendous act of courage whenever I hear anyone doing anything like that. What is the metric that you use at the end of a day to determine whether it was a good day?
Oh, my 4-year-old will come in and if all is well on the home front, and no matter if I've had a good or bad day, he'll just come and give me a big hug and say, "Can we go downstairs and play tag, or can we play hide and seek?" And like, to me, that's all that matters.
Yeah.
That to me, that's a great perspective, and he doesn't really care. He doesn't care what I do, and he doesn't care how much money we have or what we don't have.
Right.
That's all he wants is our time. That to me is a judgment of a good day.
That's a good day. Same question, but it's the end of your life. How will you have measured a life well lived?
I think ultimately, like I said before, time is our most valuable asset. Right. I have a client who a couple years ago sat me down, and this gentleman's been uber successful in what he's done. And he just said, we all trade in the same currency. And whether you're a millionaire or a billionaire or have zero, time's it's our most valuable asset. And so if I can look back in my life and say that I've spent my time developing really good relationships with my family, my loved ones, my friends, and developing those relationships, having awesome experiences with them, helping people, like most recently, a couple of my friends, we get together on a weekly or bi-monthly basis and talk about just kind of chat like this, but more about being vulnerable with each other and just having the kind of a trust tree mentality. And most recently, we challenged each other into talking about our eulogy virtues. Like if you were no longer here, what would you want people to say about you? And And for me, it's, like I thought about it, grit, like basically courage and grit and gratitude, always appreciative and compassionate,
Right.
and having the empathy. So when I think about it, is how do I judge a good life? If I've actually made a difference in someone's life and they're better for me being in it, then that's a judgment of a good life. I don't need to cure cancer,
Right.
just need to have really good, sound relationships and spend my time with the people we care about most.
Are you ready for the final and most difficult, complicated lightning round question?
Sure.
All right. If you need to take a break, right, feel free. What is an embarrassing thing about yourself that only a few people know? And TJ, for extra credit, for bonus points, that no one else knows.
Ooh.
Very few people in 110 plus episodes have gotten bonus points on that question.
I can say embarrassing thing that embarrassing is I twitch when I sleep. Okay. So when I go on an airplane and I know that I have a long, I put my hands underneath the seatbelt. So like I look like I'm like straitjacking myself because if not, I will literally slap the person next to me as I'm dozing off.
That's hilarious.
And
Poor Jill.
Oh yeah, that's why we have a king bed. She sleeps on the other end of it. But that's kind of embarrassing. I have one, but I don't know if your listeners I'm happy to share it, but I don't know if people are, it's really weird.
Oh, well, I'm not going to let you not share it now. You absolutely have to share it.
Okay. So this is full and fair disclosure here. And you probably have never had this in your
Are we going for bonus points? Is this something that no one else knows?
Well, people know, but only the closest people in my life know.
Okay.
So because it's embarrassing and
okay. If it's extra weird and extra bizarre, then that the judges may give you bonus points.
Here we go. So it all started my sophomore year in high school. All right, and it's consistent to this day. Whenever I get a hernia test, I pass out. No joke. Like literally, like drop your pants, turn your head, cough. Like I'm out cold.
That's not true.
This is no joke.
You lose consciousness.
I'm out cold. Like, and it's I don't know why. I have no. It's like maybe it's nerves or it's something down there. But literally, like to the point where I told the doctor one time, I'm like, hey, I should probably lean against this, and they're like, what are you talking about? And like, boom, on the ground.
Do you ever have you ever gotten psychotherapy? Do you know what might have caused that?
No, they would just kick me out of the room if I had to give.
No, there's got to be there's a Freudian reason behind this.
I honestly have no idea, and like it doesn't like I'm fine. It just is like just some now I'm in my own head. So,
no, I got a theory about this.
Okay,
I think that something must have happened.
Okay.
Something traumatizing, right?
Maybe I don't think that happened. It happened. So this is it's going from funny to
disturbing.
When I was a sophomore in high school, my brother had cancer, and so and God bless, he's still alive, but he had a malignant brain tumor. It changed the dynamic of our family forever. And when I was getting tested my sophomore year, it had nothing, like it was just a normal routine thing, but like I was so nerved up that something bad could happen to somebody else. Like ever since then, it's just been. I don't know. Maybe that's it. I have no idea.
Can I ask follow-up questions on this?
Absolutely.
Are there other circumstances in your life that you pass out or lose consciousness?
No.
Have you ever been kicked in the balls?
Yes.
All right. Was that a uniquely, even more traumatizing than just getting kicked in the balls? Was it so traumatizing that you lost consciousness?
Yeah, I think there was one time in particular.
Okay. In addition to the physical pain, was it also highly embarrassing? Like was it a girl in a bar?
No.
Okay.
No.
Folks listening, I feel in my heart of hearts that there is a reason behind TJ's. I wouldn't call it an affliction. Or I don't even know if it's a condition. It's clearly psychological though, right? It's not. Unless
this lightning round is going.
It's going sideways quickly. Have you ever researched this? Have you ever Googled?
Never thought much of it. I just was like, hey, dude, can you give me orange juice or something? Something with sugar content, and I'll just sit on this. I'll just sit down.
Yeah, clearly you're not the only person. There's no way you're the only person on the planet that it's all
mental. There's nothing.
Sure, that's what I'm saying.
Yeah, I don't know.
Fascinating. That is a good one. I will award bonus points for that.
I appreciate
TJ.
I went deep there.
You did.
Not many people know that one.
You know what you did,
now?
man?
2,000 or thousands of people know. So
yeah, no. You know what you did. You went unconventional there. Yeah. We had one person. If you want a good laugh, go back to the Rob Sapp episode. He's been on twice, and listen to the answer to that question from him. And all I'm going to tell you is it involves pooping on a Broadway stage.
Okay.
Pooping your pants on a Broadway stage in front of thousands of people. It is hysterical.
Wow.
You might say it's shit your pants funny. TJ, I declare this episode of Best Podcast Ever a complete success. What do you think?
I think it's great. I really appreciate you having me out.
Good. Thank you for coming on. Folks, if you've listened this far, we are a good hour and a half in. That tells me I deduce that you are Jill, maybe Leon, maybe a few folks at Cohen. And Sequoia, and you are is somewhere in there are some diehard listeners, and who have been with us for forever. So I'm not talking to you right now because you've already done this. But if you're not a diehard listener, I'm guessing that you are right now.
Yeah.
And you're going to listen to the next episode and the one after that. So here's what you want to do: you want to go onto whatever device you are listening to this show on, and then there's probably a subscribe button on there. There's probably a way for you to leave a review, so do that. If you don't know how to do that, just go to iTunes and do it there. There's a Facebook page for Best Podcast Ever, so you want to go there and hit the like button or the subscribe button, and stay informed and tuned in, and that way whenever new episodes come out, you'll be the first to know. We will see you next time. TJ, thank you very much. That was awesome.
Yeah,
I appreciate it.
Thank you for having me.
All right, guys, see you next time.
We hope you enjoyed this episode, and we thank you for listening. And remember to check out the Gertzberg Law Firm. Whether you are starting, running, growing, or transitioning a business, or if you need to create or update your wills, trust, or estate plan, our team will give you an incredible level of personalized attention and a passionate commitment to meet your objectives. We are veteran-owned, and our award-winning lawyers have the highest ranking from Super Lawyers and Avo. We have also recently received the coveted Weatherhead 100 Upstarts Award for a second year in a row, and we are among the first Ohio business law firms to offer our clients a non-billable alternative on every single matter we handle for them, and opt out of the billable hour. What we are most proud of, though, are the many things our clients rely on us for. We successfully defend them in court, but we also help them avoid the courtroom with our Cover My Six service. We protect their assets through good estate and succession planning, and we assist our clients in many non-legal business services like recruiting and business development. We want our clients to feel confident in their choices and to help them resolve any issues or potential problems quickly and efficiently so they can get back to what they love, running their businesses. More than just litigators, we are trusted advisors, problem solvers, and growers of businesses. Let us help you and your company. Call us or find us online to learn more. Thanks again for listening. We'll see you next time.